I think Singapore is probably one of the friendliest environment when it comes to doing business. But I wouldn't say that this is the main thing that people come to Singapore for. I would say that people actually value Singapore for our legal, regulatory and risk frameworks because we are one of the few exchanges that meet international standards.
Janice, it's so great to meet you. Thanks so much for stopping by.
Thank you, Jamie. Pleasure to be here.
Janice, we're going to talk a little bit about the Singapore Exchange, the product offerings, product innovation. What I'd love to do is get a little bit more background about yourself. So what's your role there and maybe get a history of the Singapore Exchange itself?
So I'm head of markets at SGX Group. And that's the equity shelf. It includes the cash market as well as the equity derivatives contracts. Actually, the exchange is like my second home. I've been there for 3 decades now. But I started quite humbly from the CIMEX entity, which was the company that merged together with Stock Exchange of Singapore to form the Singapore Exchange. It was really a momentous milestone for Singapore when CIMEX was formed. So this is actually the entity that was derivatives franchise of SGX Group 40 years ago.
Okay.
Yeah. So at that time, it was the first financial futures exchange in Asia and lots of hype around it, like what it can do and how we can be on the global map.
But not including Japan or including Japan?
No, not including Japan.
Okay, yeah. Right.
So Japan is started with a commodities exchange. So when it comes to financial futures exchange, Singapore was actually the first. So the beauty of that is that we managed to successfully grow the Euro-dollar futures contract in the Asia time zone. And that's a big deal at that time because I don't know whether you remember, there is only physical floor trading for futures contract at that time. Yeah, so no electronic trading was available.
Wow.
Yeah, so there is no such thing as like you can trade like 24 hours a day. So you're actually constrained by the real estate.
These are physical people in a pit trading with hand
That's
signals.
right, yes, yeah. So those were the days. And for a contract like Euro-dollar, so Euro-dollar is an interest rate contract that is based off the 3 months dollar LIBOR. So it would be great to get 24-hour liquidity throughout all the time zones so that traders can risk manage their positions with interest rate movements. So with a constraint like a physical floor, it's not possible. So in order to do that, actually we must have partnerships. Each covering 12 hours of time zone. And that's the magic of the mutual offset system that was innovated by CIMEX at that time and also CME Exchange in Chicago. So for 12 hours, Euro-dollar traded on the physical trading floor of CIMEX and the other 12 hours was covered in Chicago. So that allows really a 24-hour risk management time zone for all participants. I think that really put
Singapore on the map.
And Singapore on that global map.
How much of a impetus is there from the Singapore government to really make Singapore itself a sort of financial center within Asia?
I would say that the motivation and the ambition is set very high. Singapore is a very small nation. We don't really have natural resources. Yeah. So in a way, the odds are quite stacked against us. Yeah. So the only valuable resources we have is actually humans, people. And that's where services become much more important. And financial services at this moment, I would say, is top priority for the government. And Singapore is one of the key financial markets in Asia. Yeah. So by FX trading, we are third largest in the world. So
really?
Yes.
Wow.
Yeah. So there's a lot of small details about Singapore that is still quite known to a lot of people.
So on the Singapore Stock Exchange, obviously you have equities trading, you have options, derivatives, commodities, interest rates with Euro-dollar. Who decides, and perhaps this is you, who decides what products you're going to start to trade on the Singapore Exchange, and how do you know when the products are going to work? What determines what are the best products to have on the exchange?
That is actually a very big question. Well, in the exchange world, launching new products is probably quite a daunting task. For every product success that I've seen, there are many more that has failed to gain market traction. So what we normally looked at is try and identify what's the gap in the marketplace. as a start to able to fill a shelf for our clients. So our clients are global institutions. So they are not just Singaporean institutions, European institutions as well as US institutions are actually a big part of our clientele. So for us to be able to attract them to come to this marketplace for all their Asian trading requires some thinking.
So when it comes to Chinese and Hong Kong investors, they typically use Hong Kong Exchange, Shanghai Stock Exchange. Is that right?
Our value proposition is actually pan-Asia. So our shelf covers like almost 100% of the key Asian markets. That will include like Japan, India, China, Taiwan, Singapore. And we are multi-asset class. So aside from equity index futures, the other two large derivatives products will be commodities futures and also currency futures. So in total, this shelf serves our global institutions for their risk management needs, looking at Asian underlyings.
And just going back to product innovation, how can you tell if you think a product will succeed or not?
There are two measurements. Okay? One is look at the volumes. Okay? The other one is looking at the open interest. But these are very hard, I would say, very superficial kind of statistics that's offered by a lot of magazines and also newspaper reporting to determine the success of the product. But if you take a step back, what is the real economic value of a futures contract? It is actually the utility of risk management. Participants can use those products to risk manage their portfolios. So that it means that as an exchange, fundamentally you are not really a product house. You're actually providing a risk management service. So like any marketplace, exchanges as a financial infrastructure thrives actually on two parameters only. Number one is the network effects, and two is portfolio effects. So network effects is just a function of like number of users and the diversity of distinct user groups that are using your products or service. This is important because we need to match buyers with sellers to form a trade, and we can't have everyone on one side of the market. So that network effect is important. So when you look at portfolio effects, it's slightly different. Portfolio effects looks at the range of products that is relevant and available for the users, and what is the efficiency that you can offer them so that they will trade everything with you on the same single platform. So it actually measures the stickiness of the users to your platform. And in combination, I would say these two probably will determine whether a product will succeed or fail when it comes to attracting early adopters to form this network effect and form this portfolio effect.
Over the last 5-10 years in the US, one theme we've seen is the rise of the retail investor, not just in stocks and shares, but in ETFs and options too. What's the kind of state of play in Singapore and Southeast Asia?
For Singapore, it's a very unique situation because majority of our clients, both stock market as well as futures markets, are actually institutions. Retails are present in our market, but they actually play a small share in terms of volume or activities, mainly because first, our population is not high. There's just so many people. So if you minus people who are too old or too young to trade, the actual trading population in retail is not going to be much. However, because our clients are global, when it comes to stock and futures market, that's where you see that Singapore features when it comes to like top 5 markets in Asia. So Asia is very fragmented. We have maybe close to 40, 50 markets, cash and futures markets combined. We have about 50 venues. The top 5 like China, India, Japan, Taiwan, and Singapore. The rest actually it just tails, right? So for those, they are looking for the ability to enter these markets in a very easy manner. So imagine if you are global institutions and you need to access like 5-6 markets in Asia. It's quite difficult. And most of these markets, they are closed markets or semi-closed markets, whereby they either have capital currency controls or you need some kind of foreign limits in order to enter the market. That means that it puts many people actually not look at Asia as one of the investing venue, and it's quite costly to Asia. in that sense, because there's so many capital flows, and if you can't attract those capital flows, you can't actually grow the market. So one of the value proposition of SGX is we provide the risk management shelf for clients to use our products as access products. Like in partnership with FTSE Russell, we had the China A50 index futures and the Taiwan index futures, which means that you can use those futures contract as an access product or as a futures overlay to your investment and portfolio strategies. So those have been very popular when it comes to how do you get exposure without getting your feet wet by going to the countries trading on the venues itself. So it has been quite helpful, and the platform efficiency that SGX offers also means that it's actually very cost efficient for them to come to SGX to trade a variety of contracts, because we offer margin offsets between the various asset class and so within the asset classes. Increasingly, I see that margin offsets is critically important with the rising interest rate environment, or the higher interest rate environment, even if there's no more increase in interest rate for a while. The watermark has been set. So the cost of trading is getting higher. So every dollar of margins that an institution plays on exchange, they want to maximize that value. And that requires a portfolio effect to happen, whereby they can come and trade a multiple variety of products and being able to use that same dollar margins to fund those positions.
Do you see the regulation in the financial services industry in Singapore as friendly?
I think Singapore is probably one of the friendliest environment when it comes to doing business. But I wouldn't say that this is the main thing that people come to Singapore for. I would say that people actually value Singapore for our legal, regulatory and risk frameworks, because we are one of the few exchanges that meet international standards. When I say that, I really mean it, because for SGX, we are a certified F-board, a foreign board of trade by the US FTSE. We are also a recognized third country CCP by the European regulator ESMA. So that really puts us in a high watermark when it comes to the risk management and regulatory framework that our clients can expect from us when they trade. Because at the end of the day, what matters to clients is that they are accessing an institutional grade market that is situated in a AAA rated country in Singapore. That's a real compelling proposition.
So who do you see as your competition?
Actually, competition is everywhere. I'm often asked which exchanges are in competition with Singapore, and I don't really see it that way. I see it as who is competing for the wallet. So, and that's really a lot of things. It's it can be a banking product, it can be deposits with the banks, it can be mutual funds. Obviously, it can also be cash and also futures positions. So there are a variety of instruments that as a retail or a global institutions can actually access to put their money. So I see that competition is a very narrow way of defining where you should look. So if you are able to see beyond that, then actually there's a lot more collaboration than competition that we can experience in the futures and options world, especially. So the earlier example I gave you, why we are successful in the Eurodollar is because of a collaboration with Chicago Mercantile Exchange.
Right, okay.
And that mutual offset system, it still exists today. We don't use it for Eurodollar anymore. We use it for Nikkei, the Japan Nikkei futures. And that is I would say the most innovative clearing link globally right now when it comes to how you can help clients risk manage their portfolios of rates positions.
Do you have ETFs trade on SGX as well?
Yes. So ETF is actually growing very significantly for us in the last 3 to 4 years. It could be COVID, because people will have more free time to look at how to rebalance your own portfolio, and it's also difficult to have new product innovation at that time. So ETFs becomes a very easy way for passive investment. In Singapore, what we have seen is that the last 2 years, our assets under management of the ETFs has grown twice, almost doubled. And the number of ETF launches, I think, is at record high as well. So we have not done so many ETFs in the last 2-3 years compared to 5 years ago.
Yeah. Janice, this has been so great. Thank you so much for spending the time with us.
Oh, thank you. Glad to be here.